earnings for the quarter to date, and this is after, and again, not to get caught up in the numbers, but 448 companies, there are 500 in the S&P 500, 448 companies have reported. Earnings are down 4.6%. I can't find any shoots in there. If you back out energy, you're still going to see that financials are down more than that. Now, financials, there are 87 companies in the S&P 500 that are considered financials. All 87 have reported. Earnings are down 7.7% for the financials. So let's stop talking about the most obvious thing you should have risk managed for the last 18 months, which is deflation, for a second. Let's talk about the financials. Let's talk about what the bull case is on quote-unquote cheap financials when you're using the wrong earnings number. I'm just asking. I mean, this is just a, and then of course, if you want to say, well, we're going to have a rate hike, which I've been hearing for about a year and a half. What happens if you get a rate hike and the long-term interest rate falls? Well, isn't that suck? I mean, that's going to be really bad. So this gets us back to the S&P 500, and if you're looking at it like kind of Waldo up there, and you say, well, it's not down huge. And you don't use the price that it saw in September and August, God forbid, when it was down 12% from its July high. And you just say, well, it's not down huge. Well, then you're going to read the invisible shoots note, and you're going to notice that there is significant decay, which you can see in today's chart of the day, looking at the breadth of the Russell 3000. And you can see quite coherently that it's not just me. It's a lot of stuff is breaking down. And that's what it is. It looks a lot like November of 2007. And it is, well, it's fun to be on the road to debate our competitors. It's the same competitors that missed it in November 2007.